Still interested in attacking this high from above. There's a giant node in the green zone though, so we've just responded to it. I think we'll go and see it again. So yesterday we basically dumped out of the same range that we were chopping in for nearly the entire day. We fell down to this 61 area that's highlighted with gold bar, and ultimately the name of the game was to get back into the range and get through the range so that we can step on it from above. We have yet to do that yet. Basically, when we plotted the red-yellow line, the design was to get to the green dashed one. Now that we've got to the green dashed one, the name of the game is to get on top and step on it from above, smash the green zone, and then get above the red one. Ultimately, that could take a little bit of time. That's okay. Just ensure that your exposure can lead you into the red zone and beyond. Beautiful. Here's the red zone. Make sure that it's safe. By this point, securing some minor profit, making sure that it's never going to become a loss again, adjusting your stop into a profit, but making sure it's not inside of the range. The green zone could lead to the red zone, and the red zone could lead to the green. It is a range after all. This is how we used it yesterday. Getting on top of the sucker is the idea. But are we going to use it first? I mean, it's certainly allowed, but ultimately the exposure is worth far more than just the range. Smashing the red zone from above now. Let's keep that in mind. We gotta make sure that we're safe for any movements to come back down to attack this high from above. Could be off the 261 that we're about to hit here as well, so keep that in mind. Just make sure that you're not going to get stopped out in the event that it comes back and hits that high. So we could hit it multiple times. We don't have to hit it just once. The name of the game is to maintain the long trade though, not necessarily to trade down to that bar, but to keep the trade going that got us above it and allow it to hit from above. That's the idea. Now we know that we're coming up in contact with a major B point up here too. This is a giant target from yesterday that we didn't manage to get that we're about to hit right now, and that's another good spot to acknowledge. Now it becomes stepping on top of that level is the attraction. We're working our way slowly to the red zone. Any hedges must be made safe. At this point, there's more than enough profit to be able to, if you did take a hedge, if you didn't, no worries. You don't need to hedge. I also have a blue line. I do think we're going to see it again in the future. I'll make that blue and white. Eager to get back to the red zone, it would seem. Stop should be placed at a profit. There's more than enough on the table towards that red zone. Smashing it from above kind of deal. Not bearish, but that's just the plan. Smash it from above. Getting vibes that we could be interested in this yellow line as well. I'll mark this in as the 261. Here's the yellow line threatening to stop out the hedge trades that we're taking this morning. And of course, after we're done with that, coming back to the red zone again to try and rival it could be on the table. It's not as high probability of the trade as this one. Like I literally said yesterday, not only would we come up through this level, but we would come back to this one from above, like 2 moves in advance, which I ultimately do find the supporting line more attractive, so I'll make that visible. It doesn't matter if the top one breaks first, it's like which one breaks with the most purpose. So like I mentioned, this yellow line that was at the top originally was the cause of breaking or stopping out all of the hedges taken from this morning, but now this line does become more relevant. Ultimately, it's not worth selling the long trade over, like I mentioned, especially if you're in from yesterday or before. Wow, what a nice move. Coming back down to test the blue line from above here, something we can expect in the near future. And that's why it's not worth giving up any long trades. If you look for hedges, that's one thing, but they should be worth less than half of what you're holding long. Now it's a little bit feisty. That was a move that I would say it knocked out a lot of people that thought that this was a rising wedge, at the end of the day. It does raise a question about this line though, another blue and white one. Like those lines, we can't miss them because at the end of the day, there's a great risk for any stops on long trades dragged above them to get knocked out. So one thing that's also intriguing is if we were to manage to make this distance past the high, in the event that we make it past the high, that distance could send us back to the middle of the range. And what it would be like is sideways, down, up, and then middle. Like over a bigger period of time, but just for the sake of understanding this is the the way it would move. And it means that a lot of the movement that we've done upwards today is BS, because it comes back to this high most likely again, which is kind of crazy. And it could be a little bit of a longer term move, but it doesn't mean you get rid of the long trade. But yeah, it looks like we're coming down to the blue and white line. So it's almost like it has a small head and shoulders trying to form in there. But as time goes on, we get a little closer to the trend and it gets a little easier to break. Now, of course, everybody that was on top of that red zone got smashed again from above. That's this one. It was part of the plan yesterday to get smashed from above, and now it's smashed multiple times from different distances from above. So the idea of it needing to smash that level, it was definitely relevant. Definitely did do that. Something tells me that we can even go and break that yellow line to the upside and still come back and attack these people. We could still come back and attack those people from all the way up here. I'm skeptical of it because it's not in an area that's very successful for anyone that trades there. We're probably going to hurt them, but we can count on the fact that we can go and turn them into liquidity again, that we're going to go and see them to go and make them feel that uncomfortability. Because it looks very head-like. You know, if I take this here, put that there, we get some sort of right shoulder on this side over here. Honestly, it could be the right shoulder retest. Like, we do a right shoulder. Everybody would think that was an inverse head and shoulders, even though it's messy. And that's fine. Not a huge fan of the 61. I think we'll see it again. We can put this 61 in here. The attack on these people. The 61 that I think we do have to watch out for that 61 to be a squeeze. They're hoping that we make a right shoulder to an inverse head and shoulder instead of attack the red zone again from above. You know, we could do the right shoulder retest thing, but is it going to let them off? What are the odds the green zone leads the red zone? Do I make this clear here? They're taking the thing that people think they understand and turning it into a trap. Because in the consolidation, let's take a look at this little consolidation over here. They're like, oh, look at how easy the 61 is. See how it comes down off that 61? And then, oh my goodness, like, look, we just like did it again. It was absolutely amazing. Look at how that worked. It's crazy. And then all the people from this low over here, they're like, wow, look at how well that 61 works all the way up there. Bounced off of that from this low to high. Then where'd we go to? Well, we came back up to another 61. Like rallied to it. And where'd we go off of that? Well, when we were done that, we came down to another 61 there. And then when we were done that, we came up to another 61 right here. I'm like, wow, oh my goodness. Now, ever since that triangle ended, every single bit of that has ended with it. That triangle did that. Now that we're not in that triangle, we take that thing and hurt people with it. I'm like, geez, that's tough. That's real tough. So be careful. Uh-oh, you know, they're the cause of the trend break now all of a sudden. No hope. They were never given anything off. They're completely screwed. They're committing to a loss, most of them. And every single time they commit to that loss, they're pushing the market a little bit higher by buying and then exiting completely. So then new people, they turn around and they say, oh, look at all those buyers. And they don't realize that they were short and actually losing their position and buying at a high, and then they're completely gone. Like, not a new trade. That buy order is not a new trade saying that, hey, buyers are coming in, you know, as they say, right? I'm like, oh, no, they're not coming in. Those are people getting squeezed. Buying at the high? Are you kidding me? I don't think many people make it to this time of the day because they have excuses to quit. And therefore, this is my favorite time of the day, where you can say that the ratio from institutions to individuals, we're majority institutions now. We don't gotta fight people about trades like we do in the morning because they're gone, they quit. Especially like half the people couldn't even freaking handle the sideways chop at the 61 over here. They're gone. You could hedge if you are holding some long. A couple tests in that red zone from what I can see. Initial short-term profit target for any hedges. Another thing I want to point out as well, actually, just before we close, is that this blue bar, we could chop and chop and chop, right? And hit it many times, and then make the blue bar the cause of us doing the 61% retracement. Very certain that we'll see that red zone from above.